Okay, this video is looking at O1 work paper, which is our accruals, and usually this is accrued expenses. We also include on this work paper any unreimbursed expenses that need to get journaled into the system. So let's start first with our accrued expenses. Now, an accrued expense is any kind of expense that has been incurred but not yet billed. And usually these are smaller amounts, although they can be quite large in some cases, where we know that the client is going to have to pay something for this, but they haven't yet been billed for it. If they have been billed for it by year end, or within the first few days after year end, then we would treat that as an accounts payable. But accrued expenses are, generally speaking, things that haven't yet been invoiced. And in many cases, these might be things that might span a period of time, and we have to make an estimate at the end of the year as to what's actually outstanding. And because of that, accrued expenses is very much an area of estimation. While you can do a lot of good calculations, at the end of the day, a lot of it are actually estimates. And we're trying to make our best educated guess as to what the client has actually incurred up to the end of the financial year. Our template has a number of standard areas that we might want to accrue, and many of them are going to be individual worksheets in their own right, which we won't cover in this video. We'll cover them on that worksheets video. But what we've already got here for the moment is we've got an opening balance, and the reason why we simply put these opening balances here is so that we actually have a comparison. And when we look at our closing, or our 2012 in this case number, if we had an accrual last year, that's usually a good sign that we should have an accrual for the current year. Now, the first line we have here is ACC levies, and that's a special kind of insurance-related tax that we have in New Zealand, and we actually used to accrue that for the year's earnings, and realised that we were making a mistake there. We don't need to accrue; we shouldn't be accruing those, so we no longer accrue that. So that therefore we won't have a closing accrual here, but we will have a balance from the start of the year. FBT is fringe benefit tax, and we have a work paper for that on 04, and when you've completed the FBT work paper, you would come in here if there was any FBT to pay and enter in the total amount. Accounting is an area where in some cases they have a liability for the expenses, but yet it hasn't been paid yet. In some cases hasn't even been invoiced. So we would generally be putting in a provision for accounting fees. Now, if they're on a monthly payment plan at the end of the year, then they would have already paid up, assuming they've paid their invoices in full, and if they hadn't, that would be in creditors, then they would have no accrual. In this client's case, they weren't on a payment plan until the 2013 year, so there is a small liability, and I've already entered that number in there for you. And by the way, accruals are always recorded at the GST exclusive basis if the client is registered for GST. If the client's not registered for GST, then you would add the GST component in because they can't claim it back and it becomes a direct expense to them. But if they are registered for GST, as this client is, then all these numbers would be the before GST amount. Other kinds of possible accruals here would be utility costs if they are invoiced in arrears. Now, things like power is always invoiced in arrears because you don't know what you're going to use till you've used it. Telephone call costs or mobile call costs are invoiced in arrears, but the line rental or the plan cost is usually invoiced in advance. So most of the time for things like telephone, we don't bother with an accrual because if we evaluate it honestly, there'll be a prepaid portion and an arrears portion, and the two of them most of the time come fairly close to netting themselves off. The other thing we have to look at too is what is a significant amount for the client. There's no point in spending half an hour trying to identify a $15 accrual for a client. So we're only interested in telephone accruals if the call costs are likely to be high in relation to this client. Now, this client has $43,000 worth of assets, most of it's cash assets. If we missed $100 of accrued expenses, it's not going to make any difference. Total income for the year is over $100,000. So to be honest, we probably wouldn't spend a lot of time searching for low value accruals. However, if we knew that the telephone bill was over $1,000 a month, that might be worth something that we want to look into because there's a good chance that there's a couple of $100 of unbilled calls or something else that we want to take into account. Whenever we do an accrual here, for most of them, you are going to want some kind of source for that information. It might be a copy of the invoice and a formula. as to how you've calculated it. So in this case, we might say telephone 1/3 of plan fees. You might say calling costs up to 31st of March per invoice less 1/3 of line rental. For example, and then the numbers in here would be a formula, and your reference here might be to a scanned copy of the invoice. Again, there's no point in scanning everything for low value transactions. Only want to scan or provide copies of stuff for high value. And the reason we do that is that for practice review and other purposes, we might need to justify how we came up with that number. But again, there's no point in scanning everything we see. And in your case, because you're working remotely, you're not going to see everything. But if you've got it, if you've got a copy of the phone bill, then you might want to attach that as a supporting document and put the reference number that you put in here. And for the O section, because there are already 4 work papers provided, O1, O2, O3 and O4, the first reference number you could use would be O5. And so for example here I've got unreimbursed expenses. We've already created an O5 to be able to record those. If the client has employees, they will be filing a monthly PAYE return. And so we want to make sure that we have recorded the liability for the PAYE at the end of the month. Now that might already show up on their O schedule, or it might be part of accrued expenses. And we would want to ensure we keep a copy of the EDF, which is the electronic data file that we send to the IRD, that shows the total amount that they have to pay the next month on the 20th of the month following. And if it's not on our IRD schedule, we would certainly want to make sure we have a copy of that PAYE return. And in fact, I would probably get that anyway, even if it does show up on our IRD schedule, and we would reference that, say, into 06. Okay, that will include, so you would want to make sure you keep a copy of that. If they have employees, you'll also want to think about wages payable. Now, wages payable is the scenario where a pay period wraps over the year-end date. So for example, 31st of March 2012, I believe that was a Saturday. Now, if they were paying weekly, pretty good chance that the pay for that week didn't get paid until Monday. So there could be an entire week's worth of payroll that they owed but hadn't actually paid at the end of the year. Now that's actually a really easy one, because you would look in the first few days of April and see how much they paid, and you'd say, their gross salary was $5,000 for last week, and the week ended at the end of the year, and it was paid on the Monday. Therefore, we're going to accrue the full $5,000. And you might get a copy of their payroll summary for that particular week, and you'd make a note here that wages to 31st of March paid on the 2nd of April. Okay, and then you'd reference 07, and you'd have a scanned copy of their payroll summary. The more complicated situation comes in when the year-end date falls in the middle of a pay period. So for example, let's say a client pays their payroll on a Friday, and it's for the Thursday through Wednesday pay cycle. So they have a midweek payroll cycle. So at the end of 31st of March 2012, which was a Saturday, there would be Thursday, Friday, Saturday, potentially 3 days, probably two working days that hadn't been accrued. Now, if this client was on a fortnightly pay cycle, it could actually be 7 working days, depending on when the pay was last paid. And again, what you'd have to do there is you'd have to get a copy of the pay summary from the first pay in April. You would then calculate how many days, how many working days, or how many days in total, if it was a 7-day-a-week business, were unpaid at the end of the year, and then either do a quick and dirty, divide by 14, multiply by 8, or whatever the calculation is, or look at the pay summary and say, hey, it's telling me that for Monday payroll was this, Tuesday it was this, and you'd add them all up, and you'd probably show you're working either on a separate spreadsheet or on the scanned copy, if you could annotate the scanned copy with your formula and your calculations. And again, you'd then record that number in here and put your reference, and make sure that that document is then filed in the client files year-end file folder, so that we can go back and check that later on. This one here, staff annual leave and holiday pay. If they have staff, then that they will have annual leave and holiday pay owing to those staff that have been earned but not yet actually accrued. And what you want to see here, if they're using a payroll system, is a report off the payroll system calculating the estimate of leave owing at the end of balance date. And again, you should be able to keep a copy of that report, reference up, say 08, and make sure that's kept on file. IRD penalties and interest is going to come off with paper 02, which we'll look at in a few minutes. So what you're looking for here is anything that the client may have incurred as an expense but haven't yet paid, and you want to do your best at calculating or estimating that amount and gathering some appropriate supporting documentation for that amount. Any things that you think about that are outstanding, feel free to write comments or attach an Excel comment into here so that we can follow up with that. The next section is unreimbursed expenses, and here what we're looking for is expenses the client has paid in cash, but where we need to now get them recorded in the shareholder current account. Now in this particular case, where do I have it? It's not there. The client has sent us a spreadsheet of unreimbursed expenses. So let's open that up. Now what this shows us is he's given us a list of expenses that he has paid for that he is suggesting have not gone through the ledger. And so here we've got some domain registration fees or web hosting fees. He paid a bill for accounting. My guess is that is actually this one here from 2011 that's still outstanding. They would have paid that in, I think they paid that in April or May of 2011. So that's this one here. Okay, now one of the things we might want to look at with some of these things is, especially the larger ones, is just double check that they actually haven't already gone through the client's ledger. Okay, now we're using MYOB here, but we switched to 0, and usually depending on the timing here, he hasn't given us dates, and I would normally actually ask for that, for the date of the transaction. So I'm surprised he hasn't given that to us. So one of the things we can do here is let's just flick over to MYOB and let's just do a find transaction under card and look at Business Express, make sure we've got the right year selected. So he's recording here a CD, cash disbursement, on the 6th of May 2011 that they paid the 2000 and that's probably actually the 2010 year-end invoice that they paid in 2011. So that one's okay. Hopefully, I'm not sure if that's the same as the one that he's suggesting that they've paid over here. Okay, they also paid something in March 2012. And that was accounting fees, and that will actually be for the 2011 year end. So if we go over here and have a look at 2011, it actually has been paid. That surprises me, but it has been paid. We can verify that by going to the accounting expense and see what they've recorded. So we've actually recorded a 2012 accrual. We've got our March expense, and my journal for accounting fees is wrong, so we're going to have to take that out. And we'll have to go back and enter that in later. Okay, so we can actually take that out because we know it's been paid. Okay, so what that means is he's actually given us information that I believe to be wrong. So we're going to make a note here. Paid from business 8312. Okay, now what that now suggests to me is that we need to be careful about all this other information that he's given us, because he suggested it's unreimbursed expenses and we're finding evidence that it actually might not be. So the next thing we're going to do maybe is have a look at cards for Fashion Biz, and there's 8, 6, 7, 10. He's already got that in the ledger. He's got that in the ledger, got that one in the ledger. So these have actually all been paid from business. Okay, so sometimes you can't always trust everything that the client says. It would be nice if you could. NZTA is the Transport Association or agency. Yep, and so that's been paid as well. Let's look at website. No, nothing for website. What other expenses have we got? Let's go to accounts. No, card was Copy Express, that's right. Okay, so he hasn't paid anything for Copy Express here. Let's look for under website. No. Where could that have gone? I'm not sure where we would have put website expenses. Okay, so when we see something like this, we've got a flag here that says that this might be some problems with the data, so we actually want to go through and just double check to see if it's reasonable. So it doesn't look like there's anything there for Rainbow. AA Insurance. $5.28. Yeah, it looks like that might already be paid. Unless that's the New Year's insurance. No Digital River. That's not there. I know we've got lots of M2 telecommunications. Yeah, don't know about that one. 2 degrees. There's lots of 2 degrees as well. Okay, so we're going to have to actually ask the client about these because some of them look like they're already done. Okay, the next thing to look at here is he's got some BNZ credit cards, and I also know that we also have some BNZ credit cards in here. If we go, there's 2 BNZ accounts. There's MasterCard 9955. So let's just pull that over here for a second, and let's have a look to see if any of this is recorded. We have from 25th of August. So these transactions here may well already be in. Transmetro is in for different amounts. Let's scroll down here. No, there's Transmetro 49.20. He's got 94.20. Armstrong Motor Group. Not there. Back and Save Fuel 249. It's not there. Actually, it is. Those two numbers together would make up about that amount. 2 Degrees Mobile 24. Yep, that's already there. Sorry, that one's not there. Sorry, okay, we're going to work on live data here. You're probably going to get way too much information than you need. Okay, so you can see I'm just going to have to go through and check this. I'm going to put this on pause while I complete. Okay, so I've now gone through the spreadsheet and identified that many of these transactions have already been recorded, and things like these ones here probably have already been recorded, so we're going to make a note on these ones. Okay, so now what we'll do is we'll save this, we're not going to complete the exercise we would normally do. What we do here normally is, if we were happy that all these transactions appeared to be legitimate, unreimbursed expenses, we would want to make sure that we have categorized them. We'd put the schedule in here with the full amount that we are going to be claiming, including GST, and then we would do a journal to post those, and the contra that will be debit the expenses and credit shareholders' funds. So effectively, funds introduced really by the shareholder for paying these out of his own pocket. In this case, we're not going to do this. Okay, we're just going to say client question here, because we need to now ask the client more information. So we go to our questions tab. This is work paper 01. We're going to say this. Okay, long-winded way of getting to that. Okay, so now I've recorded the comment, and we're not going to post the journal right now because we need the client to come back to us for more information. So we can save 05, and we're going to attach it to our email later on. Okay, and now we'll go back to the 01 on the accruals. Okay, so again, what we're trying to do here is gather the information that we need, and then make a decision on what's going to happen going forward. Okay, so we'll go back to our checklist. Review ACC expenses and ensure the prior year has been paid or accrued. Now, they actually haven't paid the prior year. We can tell that just by going to Find Transactions and looking at the account code for ACC levies, and we see that nothing was paid last year. We just had the reversal of the journal. So actually this year, even though we accrued it last year and shouldn't have, because it hasn't been paid, we need to accrue the journal again. FBT is going to come back from us later, and accounting needs to be corrected. Telephone, not high enough for us to worry about. There's no wages, so in fact what we can do is delete the things that don't apply. Okay, so in this case there's no wages. We'll come back to IRD penalties and interest in another video, and we'll come back to this one later. So we've got a lot of outstanding things to put in here. We probably also need to make sure our journals are done here, so we'll just put journal in this reference column here, just to remind us to come back and check on that at a later point. Okay, so we can say that this is done. Review accounting fees. Yes, we have checked to see what's outstanding. Most of the time you have to ask me for this one, but that's done. There are no employees, so we can say not applicable for wages and not applicable for staff annual leave. So that's work paper 01. This can take a little bit of time running around. Don't waste your time on small value transactions, and remember, a lot of the stuff is going to come from other worksheets in the workbook, and unreimbursed expenses can either be very small because it's nothing, or as we just found out, can be quite complicated depending on what the client gives us.